Have you ever watched price consolidate for days only to miss the explosive breakout that follows? Most traders think catching these moves is pure luck, but I'm about to show you how to position yourself right before these powerful moves happen. This breakout approach I'm sharing today has one of the highest success rates you'll find in trading. It functions beautifully across every market, the execution is refreshingly simple, and here's what matters most: it generates consistent profits. Breakout strategies have been a cornerstone of my trading for years, but here's what I've learned. They're definitely not all built the same. Some work incredibly well during specific market cycles, but completely break down when conditions change. This is precisely why I'm excited to share this game-changing tool that helps you spot explosive moves before they actually unfold. Let me introduce you to the Squeeze Momentum Indicator. To add it to your chart, go to the Indicator tab and write Squeeze Momentum Indicator. Select the one by Lazy Bear. Since TradingView's dark theme makes certain elements hard to see, let's adjust a few settings. Navigate to the Style section, modify the first color to blue while setting opacity at 100%. Switch the second color to white and boost its opacity to 100% too. Now select this option and modify the visual format to circles. You'll need to set Color Z's transparency to 100%, along with Color 2's transparency. Press OK to finish. The Squeeze Momentum tool builds on another excellent indicator known as TTM Squeeze, created by John Carter, a renowned trader and published author. This tool was purposely built to spot market consolidation phases, which usually precede major explosive movements. Think of this concept as brilliant. Picture market consolidation like a coiled spring under pressure. The tighter that compression gets, the more explosive the eventual release becomes. This generates those incredibly powerful momentum surges that can drive prices dramatically in either direction. Let's dive deeper into this tool's structure. You'll see it contains multiple distinct elements. There are these vibrant green and darker green bars, plus below we observe bright red and darker red bars. Positioned centrally, you'll notice these blue and white circles. This tool monitors two essential market characteristics: momentum and volatility. The histogram displays bullish and bearish momentum patterns. Those green bars signal bullish momentum developing, while red bars show bearish momentum gaining control. For today's strategy, we'll exclusively enter positions that follow current market momentum direction. Those circles positioned along the zero axis reveal volatility conditions. Blue circles indicate the market is experiencing a squeeze phase, meaning consolidation or sideways movement, creating low volatility conditions. But observe what occurs when markets escape this consolidation and volatility begins rising. Those circles shift from blue to white. This transformation is absolutely critical for our timing. The conventional method for trading with this tool works as follows. When circles transition from blue to white while the histogram shows bright green, traders enter long positions. When circles change from blue to white while the histogram displays bright red, they take short positions. But most traders stop right there, and honestly, using just this approach yields mediocre results. To transform our strategy from mediocre to outstanding, we must incorporate two additional tools into our setup. But before we get into that, let me show you this exchange called Femex. Femex is a crypto and futures exchange, and it's a really good one at that. First of all, they have extremely low fees, which is awesome, so you're not wasting money like you would with a normal exchange. But that's not all. They also have simplified on-chain trading. If you're new to crypto, on-chain trading can seem complicated, but on Femex, everything is super easy. You just need to have funds in your spot wallet, click on on-chain, and boom, you have access to all tokens on BSC, Base, and Sol, including trending ones that aren't listed on other exchanges yet. And to top it all off, they have the BTC Vault. If you're a VIP user and deposit BTC into your futures account, you receive a weekly share of the fees generated from BTC trading without having to do absolutely anything. But wait, there's more. If you use the link in my description and it's your first time signing up, they'll give you a 20% bonus on your deposit. I know, it sounds too good to be true. Go create an account with them if you trade crypto or futures. At the very least, take advantage of it and see if you like it. I'll put the link in my description. Let's get back to the video. Like we said earlier, to transform our strategy from mediocre to outstanding, we must incorporate 2 additional tools into our setup. Our first addition is the moving average, located within technicals. The second is support and resistance levels with breaks by Lux Algo. Access the moving average settings by double-clicking it. Within the input section, modify the length to 200. Then move to the style section and choose your preferred color. Now access the support and resistance tool settings. In the style section, set resistance color to green while setting support color to red. Here's our 3-tool combination for creating this profitable approach. Trend confirmation forms our foundation, with that 200 period moving average serving this vital function. The circles from our squeeze momentum tool deliver precise buy and sell entry timing. We'll utilize the squeeze momentum histogram to guarantee we're exclusively trading alongside market momentum, never opposing it. Our final entry confirmation arrives from breaks beyond support and resistance zones, which the Lux Algo tool identifies perfectly. Let me guide you through the precise requirements for trade entries using this approach. For long position entries, markets must trade above our moving average, confirming bullish trend conditions. Price needs to break and close beyond the resistance area, shown as that green line. Let's extend this rightward by adding a horizontal reference line for clarity. Our third requirement demands the squeeze momentum histogram shows bright green coloring, exactly like displayed here. This confirms sufficient bullish momentum exists to drive price toward our intended direction. If you observe dark green instead, as shown in this example, simply skip that opportunity. Finally, our squeeze momentum tool requires at least 6 consecutive blue circles followed by 1 white circle. The white circle emergence indicates rising volatility, essentially signaling the market is starting to escape its squeeze or consolidation period. This provides our exact entry timing. We enter our long position here, position our stop loss beneath the latest swing low, and establish our profit target at twice our risk amount. We allow this position to develop and secure profits at our predetermined level. One crucial detail regarding this approach: that white circle doesn't need perfect alignment with the resistance break. If it doesn't emerge when the breakout occurs, simply wait during the following few candles, with a maximum 4-candle waiting period post-breakout. If it emerges beyond 4 candles after the breakout, skip that opportunity entirely. Let me show this example. Notice how markets traded above our moving average, then price broke and closed beyond the resistance zone, yet those circles remained blue. Moving forward several candles, we finally observe those candles transform to white. We also verify the squeeze momentum histogram displayed bright green. This becomes our entry candle. Now, regarding short position entry requirements, let me walk through the complete process. Initially, markets should trade beneath our moving average, confirming bearish trend conditions. Second, price must break and close beneath the support zone, shown by this red line. Let's extend this rightward with a horizontal reference for better visibility. The third requirement demands our squeeze momentum histogram displays bright red coloring, exactly as shown here. This confirms sufficient bearish momentum exists to drive price toward our trade direction. If you observe dark red coloring instead, as in this case, skip that opportunity completely. Finally, we need those identical 6 consecutive blue circles followed by 1 white circle. This white circle indicates rising volatility, signaling the market is beginning to escape its squeeze or consolidation period. This delivers our entry timing. We enter our short position here, place our stop loss above the latest swing high, which sits at this level, and establish our profit target at twice our risk. We allow this position to develop and capture profits at our predetermined target. This shows just one approach among many you can execute with this squeeze momentum tool. If this video reaches a high number of likes, I'll create one where I apply this indicator to divergence trading, a completely different but equally powerful approach that most traders never discover. That covers everything for today's strategy breakdown. I hope you found incredible value in this approach. If this enhanced your trading knowledge, leave a like and let me know in the comments what city you're trading from. Thanks for watching, and I'll see you guys next time.